Hi there, welcome to Kneppy Invest and welcome to three small, tiny micro stocks on the ASX that released interesting or intriguing Appendix 4Cs for the June quarter. I'm releasing or recording this video on the 29th of July, intending to release it sometime in September. The three companies I'll be focusing on in today's video are SenSen AI, Tinybeans, and Visionflex. Now, I have looked at SenSen in the past. I've looked at Tinybeans many years ago, maybe 7 or 8 years ago, and I've never had a look at Visionflex. In fact, if you asked me what Visionflex does, I probably would have said something to do with eyesight, because vision, flex, something, but no, that's wrong. Completely wrong. So what I'm going to do in today's video is for each of these three companies, I'm going to have a look at their Appendix 4C. We'll also have a look at the cash receipts history of the company just to see if I find something to like. That's the whole point of me going through these three companies, is to find a potential company that not only is close or has hit that inflection point, but can continue to grow in the future and become a much bigger company. So let's start off with SenSen, to go to SNS on the ASX, a fairly small company. In fact, this company has a market cap, I'm assuming maybe $20 million, $23.79 million. What do they do? Well, if you ask me what they did, I'd say they have something to do with traffic. And the reason behind that is because a few contracts they have won in Canada. In fact, they seem like they're doing fairly well in that country, winning contracts with the cities of like Montreal, Vancouver, Toronto. And you can just see some of the solutions here: curbside enforcement, live curb awareness, city asset management, intelligent vision agent, and fuel theft prevention. And if you click on their platforms, or the platform part of their website, the most advanced AI platform for smart cities. Well, that leaves Brisbane out. I'm joking. Anyway, so that is what they do. But a fairly small company, but they do on occasion release interesting announcements in terms of contract wins. For instance, business update, successful delivery of major contract. And it wouldn't be surprising if this is Canada. I can't remember looking at this one. Yeah, this is in regards to Canada, Montreal. Yeah, for some reason, they've been winning a lot of contracts in Canada. And it's funny, in this particular announcement, I can't remember reading this, 4-year revenue now expected to be in the range of 14.6 to 15.3 million, delivering 20% year-on-year growth. And yeah, so they do have, or do generate, a little bit of revenue. Okay, so let's have a look at this company's most recent Appendix 4C. And why have I included in this particular video? There is a bit of a theme here. Now, the first thing I always do when I look at an Appendix 4C is go straight to the cash flow, the Appendix 4C, the meat, the crux of these announcements. And now I'll have a look at the receipts history of SenSen in a second, but $4 million of receipts for this quarter. And the good thing is, because this is the June quarter, a lot of companies, this is the end of their financial year. So in the second column, you'll have their year-to-date numbers. So $4 million receipts for the quarter, $14 million receipts for the year. And they were operating cash flow positive, not only for the quarter, but also for the year. Now, in saying that, for the year, they did receive $2.3 million in government grants and tax incentives, and that did help the company achieve operating cash flow. I don't like doing that, so I'm going to say they were not operating cash flow for the full year, and that's because government grants and tax incentives, I mean, if they do become profitable, they won't receive that. So I suppose it does help the company out, but in my opinion, that is not a part of the company's operations. It's not. But they were operating cash flow positive for this quarter. They don't spend a lot of money in capital expenditure, so they were free cash flow positive, and not much else in financing activities. They did get a little bit of money from borrowings, $400,000, which probably means this company has a little bit of debt. So I always look at number 7, or section 7. So a little bit of debt, $2.153 million of debt, a little bit of unused financing or finances. So I don't like companies having too much debt. So that is something you'd have to keep an eye on. They won't have to answer question 8. So what I'm going to do now, and sometimes what I do after I look at the the Appendix 4C, I'll have a look at commentary. In the highlights section, they will be sort of highlighting the good things about the quarter and for the financial year. So, for instance, record 4-year cash collections of 14.1 million, up 13% over PCP. Operating cash flow of 1.9 million, again, quotations there, up or improvement of 3.2 million over previous corresponding period. Smart Cities 4-year cash collection growth of 2.5 million. There you go. So smart cities are doing really well for them. Okay, and they also talked about delivery of SenSen technology to I'm not going to speak French now, but Montreal. Completed invoice with cash approximately 1.5 million due for collection in the first quarter of financial year 26. They also have a cash receipts history. So let's have a look at that right now. So this is something I have been doing for many, many years. And when I say many, many years, I mean for 12 years. Over 12 years now. Okay, not in a spreadsheet. I used to do it just in a notebook. But I've transitioned to I did transition to a spreadsheet maybe 3 or 4 years ago. Okay, what I'll do is I'll just increase this a touch. There you go. And we want to move it the right way. So this is SenSen's cash receipts history going back to, it looks like 2018. Actually, in fact, the December quarter of 2017. And the main thing I'm looking for when it comes to cash receipts history is I want to see cash receipts growing through time. They don't have to grow every single quarter, but I need to see a trend. And there is definitely a trend here for SenSen. Receipts are going up through time. In fact, their most recent quarter was an equal record quarter with the June quarter of last year. So you could say, if you just compare it to previous corresponding period, it's no growth there, but the trend is still there. Now, if we start to see maybe $4 million being the record receipt quarter for the company for the next, say, few years, that would be concerning. We want to see this company get to a new record within the next, say, year. So, in fact, I'd probably say we want to see the receipts getting up to maybe $5 million within the next year. But definitely a nice trend in cash receipts for the company. So the way I'm looking at SenSen right now is I want to see this momentum going or moving forward, continuing, I suppose. And I want to see a little bit of leverage. Which means I want to see receipts increasing at a greater rate than the spending. And that means they become more and more operating cash flow and free cash flow positive. So a little bit of operating leverage. I want to see that for this company. And I do think you could be patient. It's not an expensive company. And they are illiquidly traded. So let's have a look at the chart right now. SenSen, SNS. And they are liquidly traded. And there's no massive great trend here for SenSen. Don't know when they listed. I can't remember. Must have been, not sure. Yeah, I don't think, there must have been another company with a ticker code SNS on the ASX because I would think sometime in maybe 2015, maybe 2017. So maybe I started following this company as soon as they listed. And since they have listed, really, we can see nothing doing in the chart. So the best way for the company's chart and the share price of SenSen to move into a well-defined uptrend is for the company to become operating cash flow, free cash flow positive and profitable and growing on a continuing basis. And I don't think the market sees that just yet for this company. I think the market may want a little bit more proof. Okay, so that's SenSen, ticker code SNSS. Next company is Tinybeans. If you ask me what this company does, I would say, well, allows you to share photos with your family and friends. So you don't have to share your photos, your children's photos, your newborn photos on Facebook, because who wants to do that? Well, I have no idea. Anyway, so this is what Tinybeans does. I remember having a look at this company many, many years ago, and then I just sort of went away. Didn't look like this company was doing anything, but maybe, just maybe, things are starting to turn a little bit more positive for Tinybeans. It looks like they also have something to do with pregnancy, ages and stages. I suppose that's the children growing up, family life, travel, shopping. Okay. Anyway, so let's have a look at Tinybeans. And I would assume this company is fairly small. I'm going to assume right now $10 million. I have no idea. And markup of 17.01 million. I suppose I'm close. Anyway, let's have a look at Tinybeans. I would have had a look at this company well before Life 360. So Life 360 has gone places. Even Coreo's gone places. Tinybeans has not. Share price down 8.33% today. But they did release their Appendix 4C on the 17th of July. So 12 days prior to when I'm recording this. So let's have a look at why I've included Tinybeans in this particular video. Now, the other thing I like to look at is just the share price. You can see share price is 11 cents. So I don't like companies whose share price is below 1 cent. And that's relevant when we're going to be talking about the next company. Okay, so I'm not going to look at the commentary. Go straight to the numbers, to the meat of the Appendix 4C announcement, which is, in fact, the Appendix 4C. Okay, receipts, $1.081 million. Not a lot. For the year to date, $5.162 million. But they were operating cash flow positive by $141,000. So that does stand out a little bit. They were operating cash flow positive for the quarter, but not for the year. Now, the thing that really stood out when I had a look at this is they haven't reached operating cash flow positiveness because of an increase in receipts. And we'll have a look at the receipts history, but I think they've done that through decreasing their costs. And in fact, they have significantly decreased their staff costs. And the reason I know that is because the staff costs for the year to date were $3.284 million. For this quarter, $263,000. So they have really cut their staff in this particular quarter, or maybe the previous quarter. Even admin and corporate costs have come down a little bit, just a touch, but the other costs have remained the same. $115,000 in advertising marketing. So you're not going to see much advertising and marketing for Tinybeans. Do they have any debt? Let's have a look. No debt. That's fine. What else? What did they say in the highlight sections? Yes, delivered positive operating cash flow, $141,000 US, and the second consecutive quarter of positive operating cash flows. End the quarter with cash balance of $1.71 million US. So you can just say that the first thing they've pointed out is being operating cash flow positive. It's important. They also mentioned they were named Apple App Store App of the Day in over 100 countries. There you go. I won't be getting this app, however. They also have launched Tinybeans Legacy Plan to monetize aged-free subscribers and launched Tony Myman's brand campaign. Okay, so let's have a look at the company's cash receipts history just to see if we're seeing growth. And I have a feeling it's going to be no. Well, I have seen this, by the way. Have seen this. And this is, we've got to move in the right direction. This is Tinybeans cash receipts history. And this is not what we want to see. In fact, this is the complete opposite. So, in fact, from when I first started following this company, looks like early 2017, that's about right. Cash receipts actually were moving in the right direction for the next few years, for about 4 years. In fact, cash receipts got up to a record 3.2 million in the last quarter of 2020, a calendar year. And then they didn't really grow from there. So this is what we do look for when we do see receipts growing, when we see a stagnation in the growth of receipts. And receipts found sort of a ceiling at $3.2 million. And then they started to decrease. I think signs definitely decreasing in early 2023. And receipts have been dropping ever since then. So in some way, what I'm seeing here is dropping receipts. Receipts are dropping through time, which is exactly what we don't want to see. Exactly. So I have no interest in Tinybeans just because of this. I don't care they become operating cash flow positive, because the way to grow a company through time is to grow your revenue or receipts. It's not to cut costs. That is not a great way to grow over time. So Tinybeans is not on my radar. What about the chart? Now, maybe the chart looks great. Maybe the market completely disagrees with me. So let's have a look at Tinybeans. Share price is 11 cents. Now, the share price has been under pressure. If we have a look at the weekly chart, yeah, back in late 2019, share price as high as $3.20. I can't remember at all. There was a bit of hype in this company, but I can't remember getting that high. But since then, the share price has struggled. But if we go to the daily chart, there was a bit of interest in this company back in May 2024, and the share price has started to trend upwards. Share price was sort of going sideways between about 6 and 9 cents. And then the broke through 10 cents on the 4th of July. Wow, there you go, 4th of July. And the share price has been a little bit volatile, but has been remaining strong above 10 cents since it broke out on the 4th of July. Not sure why. Did they release anything? No, I haven't released anything significant until the Appendix 4C. Anyway, so Tinybeans, not really on my radar, but just because it may not be on my radar doesn't mean it can't be on yours. Next company I want to look at is Visionflex. I just assume this was something to do with vision, your eyesight, that sort of thing. But no, it looks like I have to accept some cookies. If they were cookies I would eat, I would have accepted them without doubt. Anyway, virtual care is telehealth reimagined. Looks like they're into virtual care, ProX software, vision telehealth platform, pricing, hardware, solutions, aged care, rural health, remote health, general practice, indigenous healthcare. Quite a bit going on here, including merchant navy and armed forces and corrections. About Visionflex, their story, telehealth innovators. Talking about telehealth. So something to do with telehealth. With world first-class clinical functionality, new generation HD video conferencing software, and easy-to-use hardware, the Visionflex virtual care solutions bring together medical expertise and patients around the globe. So obviously they don't think and believe the Earth is flat because they said around the globe. There you go. Anyway, so I don't really know much else about Visionflex by reading their website fairly quickly here. I could book a demo, I suppose. Yeah, I could book a demo. There you go. Maybe I won't do that. But anyway, let's have a look at this company I've never heard of before. Well, I have heard of it, but I've never really looked at it. Visionflex. Okay, so the first thing about Visionflex, share price, 0.2 cents. That's almost an immediate no-go for me. 0.2 cents. That's it for me. But I will have a closer look at this company. Why not? They also released a presentation. So activity report, the Appendix 4C, and results presentation. So they did release 3 announcements when they release their quarterly results. Sometimes I do like when a company separates the Appendix 4C from the activity, and Visionflex has done that. So that's one good thing they have done. And I also like they've released a presentation. I love presentations. I did not look at this presentation, however, although I might in this video. So let's have a look at the Appendix 4C. And the reason I love when a company separates the activities from the Appendix 4C is because when you open up this document, it goes straight to what I want to look at. I don't have to search for it. Go straight to it. Okay, so Visionflex, $2.1 million of receipts for the quarter, only $4.5 million of receipts for the year. So this was either a really good quarter after some bad quarters, or maybe it could have been a one-off, or this could be the start of a nice little momentum period for the company. Operating cash flow positive by $309,000. It's nothing to scoff at. So operating cash flow positive, but operating cash flow negative by a fair bit amount for the year, negative $3.164 million. Not a lot of spending in investing, and they did get a little bit of capital from a convertible debt security. So do they have any debt? I've also really haven't gone through how much cash the company has. The company has about $2 million of cash, but debt. They do have a little bit of debt, $2.46 million of debt, also $1.54 million in unused financing facilities. Okay, so let's have a look at the presentation, and then we'll have a look at the cash receipts history just to see if maybe this is a company I could put on my radar if the share price got above 1 cent, or if they did share capitalization. Okay, so they talk about their mission, empowering health practitioners globally with cutting-edge technologies to elevate patient outcomes. Looks like they have a fair bit going on here. Hardware, software, third-party hardware, and lots of names there. Talking about their highlights, annual recurring revenue, 1.9 million. So it seems like they have annual recurring revenue, like they have one-off revenue and then annual recurring revenue. Financial trends, and there's not much trend there in revenue. Annual recurring revenue is going up. There is a bit of a trend there. Cash receipts, look at that. They're talking about cash receipts. We'll show you the history of the cash receipts in a second, and that's not a pretty sight. And operating cash flow, there you go. So things I like to look at. and they were operating cash flow positive this quarter. In the first positive operating cash flow quarter since the first quarter of 2024. So that is a little bit concerning. And that was that really good quarter where they had $3.9 million of receipts. Okay, so just looking at this, and net cash position going up. So they do have a trend there. I don't like that sort of trend. Yeah, anyway, it's not enough sample size. Business update, Ampler Health, a leading ASX mining company. PHN looks like they might have quite a few different sort of businesses just based off what I'm looking there, and then a bit of an outlook. Okay, let's have a look at this company's cash receipts history, and then we'll have a look at the chart. And I have a feeling the chart's not going to look good. So Visionflex, ticker code VFX, and here it is. In fact, I've been following this company for a long, long time. I'll just decrease the size of the... There we go. In fact, I've been following this company for a long time, since 2015. There you go. And interestingly enough, if you have a look at this and sort of ignore, not this quarter, but the last or the previous 3 quarters, the receipts were going up. Receipts were on the trend up. So what happened? The previous 3 quarters, when receipts just dropped off and then all of a sudden they lifted. Maybe this company changed what they're doing. I'm going to have a look at this company. By the way, this company, I'm assuming this company has a markup of 5 million. I'm just assuming that 8.42 million. I'm just wondering if they've changed the name or something. Because that's a long time with me ever looking. That's a long time following a company via the cash receipts or the pennies for receipt without ever looking at a company. And so what I'm going to do is, oops, no, that did not work. Nope, that did not work either. I just want to go back in time enough. In fact, what I should do is have a look. Oh. Looks like this company has changed the name. Because they've got this first here. And I do remember this TIG code being 1ST. Yeah, First Group. So they changed the name from First Group to Visionflex. And I can't tell you exactly what First Group did. I have no idea. I can't remember one thing about that company. So that's a company I did not look at. So that sort of fits in with Visionflex. Now, one of the reasons why we saw a decrease in receipts is because possibly First Group, their business model wasn't working and they decided to sell that business and then buy into Visionflex. And maybe that's happened in the last year and a bit. And that's why we saw, well, this company saw a massive decrease in receipts and then started rising. So maybe this is a brand new, not a brand new company, but maybe a company we should be paying a little bit more attention to. Okay, so let's have a look at the chart for Visionflex, VFX. And with the share price at 0.2, this is not going to look good. We just know this is not going to look good. So there's really no point. And if you have a look at the weekly chart, yeah, there's nothing here yet for Visionflex. But maybe this is the inflection point for the company. Okay, that's all I have for this particular look at these 3 companies. SenSen, Tinybeans, and Visionflex. Is or does any of these 3 companies tickle your fancy? For me, not so much. Maybe SenSen. I could see SenSen eventually getting to the point where I'm going to pay a little bit more attention to them. But the other 2 companies, not so much just now. But just because I'm not interested in those companies doesn't mean you have to. You don't have to. Whatever. Anyway, that's all I have for this video. And don't forget, no, wait there. Before I say that, if you have any questions, any thoughts about these 3 companies, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.